Bitcoin daily time frame, then it break down big static support level. Price came down from this high 28%, but market reaction on this breakdown, that was shocking. Nobody care what FOMC minute PDF said. Nobody say what FOMC is saying. Because I personally think number one thing fundamentally which affect Bitcoin is Fed balance sheet, their QE monetary policy. When Fed gave clear hint in their recent FOMC minute, QT will stop soon, immediately it break down. When FOMC minute came, I made detailed video, explain in detail the relationship between Fed QT and Bitcoin. But market does not care about that big policy shift from Fed, but only price action. Before breakdown of this support, give clear warning that time will come when there will be race and Bitcoin has to fight for remaining liquidity in system. Because this is not random. sp500, gold, Bitcoin, all those three things went down at same time. So they did not stop QT until system already crossed the limit. They are just talking, but technically QT is still happening. And we all have to wait before next QE. And last week this tweet you can use as sentiment indicator, because selling kidney is like panic selling. So if we compare everything, sp500, gold, silver, even yields, then Bitcoin sentiment represent market reached panic level, and this support is now big resistance. But until QE start again, we only wait and watch, not bullish on Bitcoin anymore. If you see US 10-year bond yield chart, it is going down in vertical line, and Friday closing, if you see, it is below lower range of Fed current interest rate. That's mean hike priced out, rate pause priced out. Now market is starting rate cut market pricing. So more market crash, this thing continue, then more market will price for rate cut. Because problem is 10-year bond yield closing below lower range of Fed interest rate on Friday. Then what will happen to inflation, your CPI number, and expectation because of trade war? Because that was top, yield will go down, but not very fast, otherwise inflation will have a problem. USD JPY daily chart, this currency pair is copy paste of US 10-year bond yield. When yield were falling and there was a big panic on inflation, because Fed can ignore everything, Powell always talk about long-term inflation expectation. Now they are trading at decades high, so yield cannot fall below Fed interest rate. So market expecting dovish Fed, expecting cut, but everyone forget what will happen to inflation problem. So for short term, top to bottom, price tested and now holding above 50% retracement level near 149. So few weeks, especially NAP on Friday, Fed and market reaction. Let's see how high correction go and leak come or not. what they will do in March FOMC meeting. This pair had begun upside correction. After correction, when everything clear, NFP and FOMC breakout, then we will start selling again. So let's see how high it goes. 50 or maybe 61% retracement, but that is only correction. And this is the reason we were bullish on yield, indirectly bullish on dollar last week. This last wave retraced 38%, and last week candlestick below, that's been up again. Because we are expecting upside correction short term, and technically it was range breakout. Now price testing the range. Now Euro USD H4 chart. When I updated in Telegram that dollar index need upside correction, and last week dollar index was mostly up. H4 time frame made this triangle chart pattern and one more pattern inside a triangle. Then it break down in vertical line. So Euro USD making sideways range, goes up, make counter trend correction. You can sell the rally, because if you see weekly chart of euro dollar, then price retraced 61% of this last wave, then it went up. This can be technical buying. If dollar become very strong, then range can break down, and that fifth retracement support 0.20, that can break down. GBPUSD H4 time frame, this pair did not came down like euro dollar. Compared to that, more up. So this big static support level 124, and this trend line big dynamic support. Next week both will be at same place. So this is a big dynamic support level. If you test, you can do scalp selling, but if trend line break down, then on the test you will sell. But no buying before trend line and static support retest. And since we are bullish dollar for this week, at least till FOMC meeting, good chance price can retest this trend line. Silver daily chart, big static resistance level, fifth retracement, both retest, and big reversal last week. So that was like market crash, all QE trade, they were going down. Now this trend line, 3 retest, big dynamic support level, because Bitcoin sentiment highly oversold, big panic. Because of that, entire gold trade can do a counter trend correction next week. So price goes up from trend line, on retracement you can sell, but this trend line will break down. Because what you saw last week, recession panic selling, if that continue, then first because of deflation, second because of industrial demand destruction. Silver in theory have more potential to go down compared to gold. Silver will stay down below $35, and complete wave counting from weekly to daily time frame already explained in detail. Watch that old video, because still no major change in tax setup in silver. US oil daily chart, Trump was bullish on oil, it came down big way, now testing big dynamic support trend line. So upcoming time, or you can say NAP day, that is your confirmation day. Leak come either from Fed speak before blackout or Wall Street Journal nick. Because if Fed does not intervene recession, allow recession to happen, then trend line can break down, and if oil fall below this trend line, technical selling come, then oil directly affects CPI, and if CPI change, then it will affect Fed monetary policy. sp500 daily chart, this ending diagonal chart pattern breakdown, price came down last week. That was your growth scare, recession panic selling, and now negative GDP from Atlanta Fed. Let's see what NFP saw this week. But Elon Musk Dodge department, they are cutting job, so UR can spike this week. So that was more stagflation than recession panic. So we are here finally in numbers, low growth, high inflation. But if you compare everything, especially that kidney selling tweet about Bitcoin, feels like last week from beginning to end, especially that sell off may be over. It need a counter trend correction this week. Then after NFP, market and FOMC reaction, then next selling pressure can start again. But you can see, I just show you 10-year bond yield is trading below lower range of Fed interest rate. They are pricing cut, and market have moved from hike to cut. In that environment, why sp500 will go down? Even if they are expecting dovish Fed, same like August 2024, everything, all of those same asset price, they crashed. Market start pricing 75 emergency rate cut. Then September FOMC meeting, instead of waiting entire month, Wall Street Journal in beginning of the month leaked the 50 basis point cut, and everything turned from selling to bullish trend. So sentiment, price action, everything looks same. Like September 2024, we don't need to wait entire March month. Last but not least, US 2-year yield trading below lower range of Fed interest rate, 25 basis point rate cut after market selling last week based on Friday closing. 25 basis point rate cut priced in. Somebody expecting rate cut in March, even if they skip again in March, but June rate cut is totally priced in. But nobody is saying what will happen to inflation.